Hello, students. Welcome to week 6. This week we're going to be discussing deductions and losses and deductions for AGI versus from AGI. Let's share my screen. We're going to get into it. So learning objectives. Distinguish between deductions for and from AGI. Discuss the criteria for deducting business and investment expenses. Examine the restrictions for deducting expenses. List the substantiation requirements for deducting travel and entertainment expenses. Those have a tendency to kind of change year over year, not drastically, but the rules behind them, especially with COVID. Explain the timing of deductions under both the cash and accrual methods of accounting. Discuss special disallowance rules for deductions. Describe tax planning considerations for deductions and losses. And finally, describe compliance and procedural considerations for deductions. Deduction generally. So the IRC, Internal Revenue Code, states all income is taxable unless specifically excluded, as opposed to deductions. The IRC states that no deductions are allowed unless they are specifically allowed. The IRC lays out the parameters for deductibility, and taxpayer must meet criteria before an expenditure can be deducted. So I'm not going to go through this slide, but it's posing some questions as to various deductions. And we're going to get into the rules behind these 4 examples as to whether you can or you can't. So types of deductions, we've got section 162, that's going to be the popular business one. Trade or business expenses, generally they have to be ordinary and necessary. Then we've got section 212, deductions available by individuals for production of income. And finally, other specifically permitted deductions. So we've got trade or business, that's for AGI. Production of income investments, and then other specific items, they've got to be identified in the code. So I've shown you this slide before, I think it was week 1, maybe week 2. We've got for and from, and the line is what that's commonly referred to. So for AGI is generally above the line deductions. From AGI is generally below the line. I mean, it's for, we're going to have business deductions, moving expenses, IRAs. And then from, it's going to be our itemized deductions, which is really what we're going to get into, or the standard deduction, which everyone is available to get. But if you can itemize your deductions, that's the road you go. So for AGI, section 162 deductions. I think you've had this slide before, so I'm not going to get super into it. You know, trade or business expenses, penalties for CDs, medical savings account, student loan interest expense up to $2,500. You know, you can print this slide out and keep it if you want, but I think we've already covered this. So where the 4 AGI expenses are reported, that gets directly reported on page 1 of the 1040, and that comes from Schedule 1. These are all of our adjustments to income. And you can kind of see the various things that we've got on the Schedule 1 here is what we have here. Trade or business expenses. And that's IRA deduction, student loan deduction, health savings account deduction, all those kind of things. So criteria for deducting business and investment expenses. So you've got to have the activity, you need to have an ordinary expense, it's got to be necessary and reasonable, and you've got to document it. And it has to be personally incurred by the business owner and the taxpayer. And it's purposely kind of vague like that, ordinary and necessary. They didn't want to constrain that so much that they were constantly having to settle lawsuits or arguments as to whether an expense is deductible, which is why they kind of left it ordinary and necessary. It's a big umbrella. So business or investment activity, there's got to be a profit motive. Expenditures must be because of profit motivated activity, meaning it can't be a hobby. Hobby is different from a trade or business in that there's not really a profit motive. It's more intrinsically related. Section 212, individuals conduct expenses if activities engaged in for-profit and trade or business must be separated from investment activity. Expenses must be ordinary and necessary to be deductible. Hobby, personal expenses are not trade or business expenses. Meaning, I mean, so if we go back to this first one, Um, so, this top one, David, CPA. David purchased exercise equipment for $3,000. He works out on the equipment to maintain his stamina and good health, enable him to carry such a heavy workload. Um, so he's working a lot, but he's got workout equipment, so that helps him, right? No, it's exercise equipment unless he's a personal trainer. That would not be deductible for a CPA. It might make him feel better, and maybe it does help him with his business, but it's not ordinary and it's not necessary. Going back here. So trader business versus investment classification. If it's trader business, there's more flexibility on deducting the losses, such as losses on the sale of an asset. It's treated as ordinary. Trader business expenses are usually deducted for AGI, and there's a lot less imitation or limitations on that. Section 179 deduction permits immediate deduction of up to 1,040,000 of newly acquired trader business assets. That's a sped up depreciation. I bought this $1 million piece of equipment in year one, and it's got a useful life of 10 years. I should deduct 10% of that each year. With section 179, you speed up that deduction. You get the immediate benefit. The flip side of that is if you were to sell that, then you have to recapture all of that deduction. Trader business is defined as holding oneself out to others as engaged in the selling of goods or services. We've got slide 2. If it's held for investment, then limitations are going to apply. Loss in the sale of an asset is treated as capital loss, which is subject to capital loss limitations. May be subject to hobby loss rules, which disallow losses. So if you have a hobby, you can't deduct losses on that. Generally, the IRS views it as a hobby if it doesn't turn a profit after, it's either after 3 years or 3 out of 5 years. Can't remember the exact rule on that, but you've got to show that you're trying to make money with this. And finally, deductions are from AGI, and therefore they're going to be subject to income limitations and thresholds. And I think I'm going to stop this video here and we'll continue in the next one.